Hello, everybody. We are going to get started in just a couple of minutes. I want to give you guys a chance to get situated. Hello, welcome. We will get started in just a minute or two. Give you guys some time to grab some water, get seated, and then we'll lift off. Hello to those of you that are just now joining us. Una, hi Una, it's been a long time. Hope you're doing well. So glad to see you can make it. Seeing a lot of familiar names on here. So glad to see that you guys were able to join us again. Ashish and I are excited to present with y'all today. Tim, welcome. Praveen, hello. We'll get started in just 1 minute, guys. I want to give everybody a chance to log on and get situated. For those of you who are new to the ERPfixers webcast, we will be recording this session. As a matter of fact, we are currently recording. And then we will be posting the recording to our website as along with the Q&A. So any questions that you guys have, we'll have that posted on the website. And because you guys are registered in order to attend this webcast, we will also be sending an email to y'all with the recording. So if you know anybody who wanted to register or who wanted to attend but couldn't, we will have that recording available to them and to you guys. So Ashish, let's get started. Hi, everybody. My name is Jess. I'm with ERPfixers, and welcome to our June Ask a Fixer webcast. Presenting with us today is our SAP FICO consultant and author, Ashish Sampat. Ashish, thank you so much for taking the time to present with us today. And today he's going to be discussing tips to master SAP Controlling Design and Readiness for S/4HANA. So I want to reiterate, because I'm seeing a few more people just now joining us, that if you guys have questions, we are going to hopefully have time at the end of this session for a live Q&A. Any questions you may have, please feel free to share in either the Q&A box or the chat box. It doesn't matter. I will be behind the scenes collecting these answers throughout the presentation. So Ashish will answer these questions at the very end. If we don't get to your questions, again, for those of you just joining, we will be posting the questions and answers to our website a week from today. Okay, next slide, please. So who and what is ERPfixers? We consist of top quality experts in all SAP modules, and we are ready to help and assist with our knowledge in SAP. We offer an online platform, SAP Optimization Assessment, Material Ledger, S/4HANA Transitional Roadmap Reports, and Cost Transparency Reports. If you'd like more information on who we are and what we do, please visit our website at ERPfixers.com. Presenting with us today is Ashish Sampat. He is a finance and costing professional. He has more than 2 decades of industry experience in the SAP finance and controlling space. He has provided solutions in SAP Controlling, including product costing, material ledger, and cost center accounting. He is also the author of several books on controlling, First Steps in SAP Controlling, Expert Tips to Unleash the Full Potential of SAP Controlling, and SAP S/4HANA Delta for co-configuration. Ashish is based in Chicago, USA, where he works as a freelance SAP FICO consultant. Next slide. Okay, I'm going to hand it off to Ashish.
Great. Thank you, Jessica. Hello, everyone. Thanks for joining and your interest in this topic. As Jessica gave some introduction, my name is Ashish Sampat. I'm a controlling consultant. So a lot of the times, questions come up. Let's say we want to make a journey, a road trip or a plane trip. What kind of preparation do we need? First, we want to find out what is in store in the destination. And then we want to see if we are prepared. So as an example, if I'm making a road trip, I want to ensure my tires are properly inflated. So am I making optimum use of what I have with me myself? So all those things, the SAP S4 journey is very similar. Of course, I may be simplifying it, but to know what is in store, where we are going to reach, and what do we need to prepare to reach there. I think that's the fundamental question that we are trying to address. So in terms of finding out what is in store, we have to be aware of what are the changes that have been made in the controlling module. So that's one part that we will try to focus in our discussion today. And the other piece is around, are we currently optimally utilizing it in terms of what functionality SAP has to offer and what functionality works for you or your clients or your organization? And that's the piece where we'll spend a lot of time. And again, we have discussed this in several other webinars in the past, as well as other presentations. But are we taking proper advantage of the integrated nature of SAP system? So this is what we'll try to focus on in our discussion today. And I have an overview of some of the topics which were, of course, in the webinar or webcast details available. So the same topics. First, we'll look at what are the important changes in controlling under S/4HANA. Again, we are mainly going to talk about the CO side of things. Of course, material master, we know the field width has increased to 40 and many other small and big changes have occurred, but our focus will be on the controlling side. And while we do that, a lot of optimization opportunities, right? Cost allocation methods, standard costing methods, errors warning during costing. So a lot of tips to learn from and a lot of optimization to be done. Other topics will include cost objects. Which one is the right cost object for me? And we have a small poll also, which, will try to gather some a pulse of the market as to which clients are using what type of cost objects. It will be more of a anonymous poll, but it will be interesting to find the results of that. And the work in process variance and settlement. Again, these are fundamental to month-end close for manufacturing organizations. There are some enhancements done by SAP, so we'll look at some of those. In fact, wherever possible, I've tried to include the upgrades or updates or new features that SAP has introduced and how we could utilize them over and above, optimizing our current methodologies and processes. Again, talking about the freight and move types to GL account. These are, some of the favorite topics of a lot of people. So we try to include some of those important pieces as well. And then again, another one on the GRIR. And lastly, we'll have the questions and answers. And as Jessica highlighted, please put in your questions in the chat window, question answer window. Jessica will monitor and we'll try to cover them towards the end. Okay. So let's look at the important changes. Now, some of you may already be aware of these changes. So, I welcome all the questions, suggestions, or all your experiences with some of them if there are, small nuances. And I've tried to categorize them into about 5 fundamental changes that SAP has introduced. One is, of course, cost element is now part of GL account. We have the ability to post cost of goods sold by cost components in FI. Earlier, it used to be only one account. Now we can have multiple. Same with production variances. And now what impact does this have to the COPA or the profitability analysis or margin analysis, as we call it now in S4? And what advantages does it give us in terms of costing based versus account based? And then material ledger is, of course, made mandatory with S4. So what implications does it have from clients which are currently using material ledger or not using material ledger and so on? So we'll briefly look at that piece. And of course, this is just a visual. Left side is ECC, right side is S4. ECC, many of these modules, overheads, material ledger, COPA, assets were feeding general ledger. But because they were different reporting from different modules, we used to have reconciliation issues, right, between overheads and material ledger and COPA. Whereas in S4, everything is coming through one single table, Universal Journal, AC DOCA. And all these modules are individually posting to those tables, and our reporting is always through the AC DOCA table. So that's where the big change in the architecture and the way we access our data. So that's one big piece. And in order to do this, what we have seen is that the overhead controlling piece, where let's say we are doing some sort of assessment or overhead calculation, what used to be secondary cost element in the old setup or in the ECC setup, which was not flowing to general ledger directly. Now it flows to general ledger. And how is that being achieved? That brings us to the next slide. That now cost elements are now made part of the GL account in S/4HANA. So what you'll see here is there are two new fields introduced, right? One is, what is the GL account type? Is it a secondary cost or primary cost, balance sheet, and so on? And there is a cost element category also. So in this example, we have an assessment of quality costs. That cost element is now part of GL account FS00, and there will be a drop down of the cost element category. So this is an example of an assessment. So 42 is used. If this was internal activity, it would be 43. If this was overheads, it will be 41. And what this would mean is that when an assessment entry is being made within controlling, it will flow to financial accounting or the AC DOCA table with great amount of detail, including the sender, receiver, and the account being used for that, which is a big benefit compared to what was earlier. They used to have just one account, COFI reconciliation account. So that's a big change. The other one being, when you go to transaction codes KA01, create cost element, KA02, change display or create secondary, they will all point to FS03, FS00. So that's one big change, which would also, some people have asked, which would mean that what happens if I were to post a financial entry? Can I make an FB50 or F-02 journal entry to these secondary cost elements? No. For that, you have to do the transaction from the source module. So as an example, if you're doing an activity allocation for 43, it has to come through KB21N or equivalent transaction like COR6N or CO15 for activity confirmation, or CO11 and so on. Same way, assessments have to walk through KSU5 or its equivalent transaction in other allocation methods, and it cannot be done from FB50 journal entry. That's one big takeaway. The other one being cost of goods sold. So in the past, this entry for all cost components that we are talking about, direct material, third-party material, overhead, and so on, that breakdown at the time of sale is available only in costing-based COPA. It was not available in account-based COPA or in the GL account itself. But with S/4HANA, this feature has been introduced where you can go to this configuration path and activate the COGS split in FI by the cost components and identify the accounts. So what it would do is it will post multiple line items in financial accounting. So instead of having one single account, you'll see multiple accounts mapped to each cost component. So again, very powerful feature. On similar lines, there is this production variance posting in variance category. So the price difference account for production variances, PRD, PRF, used to be only one single entry in financial accounting. If we have to take the breakdown of the price variance, quantity variance, resource usage variance, and so on, we have to go to costing-based COPA. But now with this feature, we can use this in account-based COPA as well as in the financial accounting posting, which would give us a better granularity in FI, which was not available earlier. So again, this is a big improvement. Now, what that would mean is that now that our account-based COPA has a lot of facilities, including COGS split, production variance split, and so on, I have a better visibility of my postings going to account-based. And this is where, in the past, we never had that much of an, granularity in account-based. We had a lot of granularity in costing-based. And that's why it used to be the preferred choice for most clients. But with these limitations that are addressed, including realignment, if you want to call it that way, this is a big win for account-based COPA. And therefore, this will become or has become, I should say, the go-to place for all your profitability reporting and margin analysis reporting. And therefore, you want to possibly look at an option to deactivate costing-based COPA. But do we want to do it now, or do we want to do it at the time of switching over to S4? That's a big question. I've seen many scenarios. Clients have said that, no, we can't deactivate costing-based COPA on day one of our S4 migration. We will use it for a couple of years. Some clients have said that, no, I want to activate account-based COPA ahead of time, even though in ECC, it will not give me all the necessary information, but I will still be able to understand how it works and what kind of reporting am I able to get out of it. And depending on how that comfort feel happens or the change management is done in my organization, I will decide what to do at the time of S4 migration. Again, clients which are greenfield, it's a no-brainer. You want to use account-based and you want to continue with that as much as possible. The question is more around those who are using costing-based in ECC and want to find out what to do in S4. So I welcome any questions, suggestions from folks on that point, and see if it is something that we can get some flavor out of what you have experienced. Okay. So this is yet another slide which kind of speaks about the conceptual explanation of what costing-based COPA is in ECC and S4, what account-based COPA is in ECC, and what account-based COPA is in S4. For profitability, as we know, we are very much used to using the terms value field. Value field is nothing but a summarization of various cost elements or accounts or condition types. And these amounts are available with their individual breakdown. And of course, this is multidimensional, right? So customer, region, profit center, and whatnot is one of the characteristics. And then the value fields are here. Note that the COGS value fields that we discussed, the details are available in this fashion. But when we go to account-based COPA in ECC, or for that matter, costing-based COPA in S4 without activating those two units, COGS and production variance split is not available in as much detail. So this blue color and peach color is just one account without being on S4 and without activating that feature. But now when we look at account-based COPA with the two features that we looked at in the prior two slides, this detail is available, this breakdown is available. But one big change is that now you have to look at account and not a value field as we were looking at earlier. So that's a big change that we have to be aware of and be mindful of while developing reports. Another thing that teams may have seen is that K30 reports for COPA that you are used to seeing here are not directly available. You have to develop K30 new or use some Fiori transaction styles or reports for reviewing that data. So those are the big changes. The last change that we want to highlight is around the material ledger. That in ECC, material ledger is optional, which is also, of course, includes the actual costing functionality. So when a lot of clients say that I'm using material ledger, very likely they're actually using the actual costing piece. But when it comes to S4, what is mandatory is the price determination 2, which is a transaction-based material ledger. The actual costing piece, which is done through price determination 3, is still optional. So if you are using actual costing today and want to continue to use actual costing in the future in S4, that's perfectly fine. But if you're not using actual costing today and you don't see a business value, there is no system compulsion for you to use it. What is compulsory is just the price determination 2. Now, what does this mean? That price determination 2 means you don't have to run CKML CP at month end, the closing cockpit at month end. You only have to use it if you are using the actual cost piece. The one big advantage of making that change was that all the material ledger values flow to AC DOCA for the transaction based posting with price determination 2. The new tables MatDoc will update the details from material side and AC DOCA on financial side. When you have the actual costing implemented, that's when the MLDoc and MLDoc CCS come in picture. So that's one difference. So now the question is, if I'm already planning to implement material ledger, should I wait for S4? Question is, are you plan to use it for actual costing? Then maybe do it now. Why don't you take advantage now versus waiting for S4 to come up? But if actual costing is not to be used, then there's no point in doing it now. So that would be the consideration. So that brings us to those individual topics where we said that we want to look at whether we are using it optimally. Now, a lot of this is probably known to a lot of people, so we may, just go through it in a summary format. So distribution assessment, I'm sure most of you are aware when to use which one. With ECC, there's always a concern around, oh, if I use distribution, I'm going to make a lot of entries in the system and this may impact performance. So how to optimize that performance is the question. And if we are using assessment, that visibility is lost. So are we able to still get what we need from the system, from business requirement as well as performance point of view? So again, this is just some background around what happens in distribution versus assessment. In distribution, we always retain the identity of the cost element, which basically means that the primary cost element is used for doing the allocation. The receiver also gets to see this. Whereas in assessment, the receiver does not get to see the details behind the scene. You just get summary posting by a summarized secondary cost element. Now, note that both these features are available in S4. So question of whether I should use assessment versus distribution from technical point of view may be a moot point because the performance concern is already addressed. So it'll all boil down to what kind of business requirement you have. Do you want to see summary or do you want to see the details? Again, there is one example here, which, a lot of people may have already been aware that in distribution, you get to see the credit with the same cost element, and then the debit on the receiver side goes with the same cost element. So if you're talking about one sender, 3 receivers or 4 receivers with 3 cost elements, then you're talking about 3 times 4, 12 as on the receiver side, and 3 times 1, 3 in the sender side. That's the idea. Whereas in case of assessment, you're looking at only one summarized assessment cost element for that group of accounts, basically, to go to the receivers. So that's one difference. Now, on the optimization front, right, so there is this nice little feature of using optimizing the performance. And of course, this requires some basis activity to do a runtime analysis based on the inputs given in this note for allocation. What it basically says is you have 3 options: to select by cycle, select by segment, or optimize selection by cycle, these 3. So that is one thing that basis should tell us which of the 3 works best for you. The other option is parallel processing. Now, again, parallel processing is something that works on multiple servers, so performance will be, pretty faster. And that's something that the team should explore if this is to be done. Again, this is mainly for ECC, can also be used in S4, but the performance concern is something that we can address through this. There are other methods of distribution. We looked at distribution and assessment for cost allocation, like indirect activity allocation, periodic reposting, template, and overhead, those transactions. Apart from that, with S4, you also have a universal allocation. So you guys may have seen another webcast hosted by Paul Ovishele, the founder of ERPfixers, where he highlights, with a lot of detail in terms of what universal allocation methods are possible and when should you use them. So the screenshot below is just an example where first we have to look at allocation context. Is it cost center? Is it margin analysis or profit center? In this example, this is a cost center based allocation. Actual plan indicator. Again, whether you're talking about plan assessment or plan allocations or actual, an allocation type, whether you're talking about overhead distribution, intercompany, top down being used for margin analysis. Now, one beauty of this manage allocations is just one app for a lot of transactions. So all these transactions that we have highlighted here, they have their own plan and actual. One for change, create, display, delete, and execute. And similarly for plan and actual, you kind of, multiply it with 10 times or 5 times for plan, 5 times for actual. So you're talking about 10 times each of these. So it kind of creates that complexity. So this universal allocation kind of combines multiple transactions in one. That's the main advantage. And we spoke about margin analysis. So KEU5, which is cost center to COPA, can also be done through the Universal Allocations app. Okay, very powerful. Standard costing methods. So again, these are 4 generally used ones. Most widely used is, of course, the one with quantity structure. By quantity structure, we mean BOM and recipe or BOM and routing. Most widely used, there are some clients which use additive costs for loading costs on, let's say, freight, incidentals, and others. I've seen some use even for fixed costs, but which is a very unique use of that. Product costing without quantity structure. This is when you don't have a BOM recipe. You are trying to address that information, calculate it outside the system and feed it in the system. That's the piece. And mixed costing is where you want to look at the costs coming from various procurement alternatives, as system calls. It's nothing but a source, whether it's a in-house production on plant A, B, C, D, or produced on a production line 1, 2, 3, or procured from outside from a vendor. These are all the use cases for mixed costing. Again, we know for product costing with quantity structures done through CK11N, marked and released through CK24, mass costing done through CK40N, additive cost individual run through CK74N, and once you've done that, CK11N, CK40N picks it up. But when you have to do CK74N for mass, we don't have any standard SAP solution that requires an enhancement. So most clients end up writing a custom program for this. And when we look at the without quantity structure, that's KKPAN, mark and release through CK24. Again, this is individual transaction. There is no mass. So you want to write an enhancement to make a mass use of it. And then when it comes to the multiple materials, it's done through CK24, just like in case of others. So again, there's no mass option for this here. Mixed costing, again, CK91N, where we say where I am buying from, and CK94, what is the proportion or the mixing ratio I'm buying from or making it from. Again, here too, there is no good way to see this in a single way or a mass way. You have to write an enhancement. So yeah, and this is another way to look at how KKPAN is different than CK74. And CK74 and additive cost requires you to run your regular costing one more time, whereas KKPAN can be marked release right away. But both of them, neither of them have any mass transaction, just that you can release KKPN directly without CK74 and additive costs. The screens are very similar because they use unit cost estimate. Now, what's new in S4? I think I'll come to that slide and we'll come back to the BAPIs. So on the left side, you see the ECC screen, selection, structure, explosion, costing. Whereas on the right side, you have selection and costing. So the structure explosion is kind of merged into the costing step. That's the main takeaway here. Other steps, analysis, marking, release are same, no change here. One big or a new feature, I should say, is edit costing run has the repeat feature. So normally there are just 3 tabs, right? Costing data, dates, and valuation. Now in S4, we have a repeat tab. Typically, many organizations say that I run my costing every month, so I create a new costing run created with reference. But this repeat run will allow you to say at the defined frequency, rerun the costing, let's say monthly in this case, and pause after the selection step. You can also pause after the costing step. That way you can straight away go and look at the costing results rather than first CK40 and create a new costing run and so on. So that's one advantage that you'll notice in this feature. Maybe a very small feature, but can increase somebody's productivity, right? In a big way. So that's the big advantage. So let's go back to the BAPI slide, which we were looking at. BAPI is nothing but Business Application Programming Interface. It's a type of a program. We usually access it through SC37. I'm sure many of you must have used it. Now, for costing related BAPIs, there are multiple. Get list of cost estimates, get detail of a cost estimate, get itemization, and then get explosion. For me, this is the most versatile of them all. If you use this BAPI for cost estimate explosion, it kind of gives you the CK39 feel in a tabular format, columnar format. And then you run it again and again for all the materials involved through, let's say, a wrapper program. It gives you a good list. So it's kind of, as we know, CK13 is such a beautiful transaction, but there is no mass way of doing it. That's where this BAPI will come in picture. Again, more of a existing feature also available in S4, highly recommended for those who want to use mass data extraction. Okay. Let's see. Now, this is yet another one, investigate error warning messages. I think, again, a very popular topic. A lot of questions have been asked around this. Even on, LinkedIn messaging, I get a lot of questions on this. We were doing in-house production. Now I'm shifting to procurement. What should I do? So you say, okay, go change your procurement type, ensure that there's a purchase price. So those kind of changes. So what to do when you have those error messages? So again, I think many of you may have seen this before, so I'll quickly summarize. It's basically, whether it's an error warning or information. That's the first one you want to say, what type of error message. And what is the message number or the code? Is it CK240 or something else? We have some examples in the next slide, like this GL account does not exist or costing items without cost element. Now, these codes are very useful to categorize. So what I've tried to do is in the next slide, actually a set of slides, I've tried to compile these frequently seen error messages and have given some description, explanation, and what are the steps for correction. So if we pick one of them, this object was not costed, CK60. So it's likely that it's missing the procurement price of bill of material. So we first look at the procurement type in material master, MRP2 view. Is it E? Then it's looking for a BOM. If it is F, then it's looking for a purchase price. So then identify whether the BOM is missing, please set it up. If purchase price is missing, please set it up, rerun costing. So as we know, costing is a very iterative process, right? It runs multiple times. So we have to keep running it till we resolve the errors and ensure that costing is error-free. So there are some other messages like cost estimate for material in plant is incorrect. So this is where, it can get confusing. The challenge is some of the underlying materials have an incorrect cost roll-up. So that's when you rectify that material and the higher level material gets corrected. Now, if there are certain component materials used across multiple BOMs, then obviously that same error will come across multiple BOMs, my header materials basically. So fixing that one material can resolve many others on the higher level. So that's another feature. There are about 4 or 5 pages of this. So I'm going to run through 1 or 2 examples on each page. Now, this is the most widely used. CK40, cost component split costed with value 0, which basically says that, there was no result of costing. With 0 cost, I can't find where to put that cost in the cost component. So therefore, you tell me. Now, this is where, again, it's the same situation. Either the BOM is missing or the purchase price is missing. Once you maintain that, it's feasible. Consumption account cannot be determined. This is the valuation class issue. So once you fix it, it will allow you to cost. Either, most likely, it's a master data issue. At times, it can also be a problem with incorrect consumption account mapping in that MMFI account determination. We'll come to that towards the end. but that's another very widely seen error message. Let's see on the next page. No source of supply could be found, CK380. This is again missing the source list. So once you maintain it 2001 or 05, it allows us to move forward. What else we can, yeah, now this one, value of costing item in itemization is 0. This is usually a warning message, and it may be okay to ignore it, but again, sometimes the information and warning message is also giving you a lot of hidden pieces around, some hints, so that is this real, or could I really ignore it? Those are the questions that may come up. Yeah, no valid source of supply. Again, this is missing PIR. So once you maintain it, it will be addressed. There's some important transaction codes used for costing. Again, a lot of you may have already seen them. The one that I find it very useful, display price change document. When we have released the cost, CK24, it posts a price change document. Now there is one more, CKM-PC search for price change document, which basically is a combination of this CKM-PCD, but it tells you what was the quantity, what was the old standard price, what is the new standard price, and what is the revaluation amount. So when you look at it from FI line items in for account UMB, it gives you the details, and this is how you could tie. As accountants, you want to tie, is my valuation correct? Whatever revaluation took place, is it correct or not? And then some of these mass reports, very useful. Let's see. So some other transaction codes for costing, again, very standard. Good news, all of these are available in S4, so no major change. Now comes the question of which different cost objects are available for use in SAP Controlling. This is where, Jessica, if I may request you to launch the poll, that'll help us get some pieces. Yes, here it is. What different cost objects have you used for your business? Production order, process order, CO production order, product cost collector, internal order, plant maintenance order, sales order, cost center, and project WBS element. So it'll be interesting to see what's the proportion or number of people who have used this. More than one, you can select more than one, that's fine. Okay. I'm going to close the poll now. Okay, great. So I'll just read out the percentages. I think it may be visible to most of you. So 13 out of 15 pollsters use production order, 9 out of 15 process order, 5 out of 15 CO production order. Pretty good for an object which is not widely used. Product cost collector 12, internal order 11, plant maintenance 8, sales order 8, cost center 11, and project 10. I'm a bit surprised cost center is so low. I would have thought 100%, but no, it's okay. It's fun. It's good to see this kind of statistic because it kind of brings in the multiple years of experience across multiple clients and industries. So pretty interesting. So thank you all for voting. I was curious to see, but it kind of came through. Okay, great. Thank you, Jessica. So again, each of the objects. So I think knowing that so many of you have used these many objects in your businesses, it's kind of clear that they are widely used. And this is where I wanted to give an overview of what those objects are and how do you configure them in terms of system setup for order type, settlement rule, and so on. And what are the prerequisites? So if we take an example, product cost collector, which is typically used in repetitive manufacturing, needs a material master, bill of material, work center, or a resource, and routing and master recipe. Whereas if you're using a CO production order, all you need is a material master. You technically don't need BOM recipe, routing, and so on. You can have it, but it's not a must. Whereas in process order, production order, you must have those details, right? Whereas internal order, the most flexible one, is all around, trying to capture overhead costs, right? That's where the object type itself is overhead or an investment. And when it comes to plant maintenance, all you need is the work center. You don't even need the material mass. You can have it, but it's not a must. Same thing with sales order. You don't need the others. You only need the material. If it's a service related billing, you don't even need the material. Now, cost center, again, most flexible, just like internal order, used for mainly overhead cost capture as well as production. But again, it does not have a specific order type because it's kind of a permanent cost object, if you will. Whereas internal order can also be a permanent or a temporary one. So main setup is in settlement profile, allocation structure, and peer transfer structure. And those are the main transactions which we configure. And when it comes to the master data or the actual transactional data in the period end, these are all the transactions. So if we pick one, the product cost collector has a one transaction which does a lot of things. MFDF, which is backflush all your goods issue confirmation, goods receipt. Whereas in production order, you do an explicit goods issue. You can also backflush at the time of confirmation, or you can do an auto GR versus an explicit GR. So those are the kind of flavors that are available. With period end, whether it is overhead, WIP, variance, settlement, there are individual transactions for each of these objects. And then reporting. Most of this, KOB1 is the most commonly used one. There are certain other ones like KSB1 for cost centers, and KRMI is an additional transaction for the product cost collector. Now with S4, this may be the question. So how is it different in S4? Well, the cost objects are similar. What has changed is mainly the period end transactions and some of the reporting. So most of the transactions have a suffix H for HANA available. So if you're talking about CO88H settlement, my current one takes a lot of time. So HANA has this optimized transaction, CO88H, which works pretty well. Okay. So again, this is a scenario for process versus production order. You're making an acquisition. What will be the factors that will go in determining whether you ask the acquired company to use process orders that you're using today or let them continue to use production orders? So a lot of things depends on what type of industry you are in and what kind of SAP design it fits and change management needed from the production planning side. Okay. There may be a question around when should you go about automating WIP variance settlement. So again, work in process is when your order is not completed, so neither delivered nor TICO. And so these orders are carried forward to the next month until they are closed. And then variance calculation is when the order is completed, you calculate the variances, and in the time of settlement, it does the posting. There'll be no calculation at the time of the first two, will only be calculation but no posting, but posting happens at the time of settlement. So a lot of clients have found out, okay, should I run them only once a month or should I run them more frequently? Is weekly a good option? And should I do them in an automated way? So these are the transactions, and a lot of times, it becomes a bit resource intensive. So you want to say that, okay, I want to run them at month end through a batch job, and that's something that will help me in my productivity. Again, you may want to do this in the night of peak hours. Again, this is ECC, it can be applied in S4 also. But one feature that comes up in S4, and I'll come to that briefly, but this is just an example of, the background jobs are a little different than the normal jobs. You want to automate them on a weekly basis with some job naming convention. So just the users have to go and review the spool output to see if it gives the right answer. Yeah, the S4 feature that I wanted to focus on is the operation level information is now available in HANA tables in S4 in FI side. In the past, it was not the case. So we used to always have to go to production planning tables to look at that information, but now you can have WIP or operation level information. There's also a feature for a real-time WIP that's available. That's something that can be explored as well in S4. Separate GRIR. I think this is one of our last couple of tips or productivity improvement notes that we can look at. And then we go to the question answer session. I know we just have about 14 minutes left. So this is one scenario where the client says that I want to separate out GRIR between intercompany and third party. Third party is an external purchase versus intercompany purchase. How can I do that? Standard SAP out of box combines everything under one account for one rather transaction called WRX. And we want to say that if it is third party, use YRX as an account modifier, and if it's intercompany, use ZRX as the account modifier. So this can be done through a user exit. Just enable the rule for this with valuation modifier instead of just add the general modifier in place of it. So don't only have the valuation class, get the general modifier into it, and then map the individual accounts. There is this user exit that can be activated, which will help you code or program it behind the scene under this program and say that if the account group of my vendor is plants, which is intercompany, then call this account through the modifier. Or if it is not equal to the plants, then call this modifier. So that's how you would address that. Now, again, this user exit can be used in S4 also. There are other features within ECC and S4 that can be used, like log SIT, which is a business function to do a value-added stock in transit. Add that with BADI CKML cross-company. You can get cross-company transfer of cost components across multiple company codes. That's the feature that's available as well. So again, a lot of this is, what do I have today that I can utilize versus, waiting for S4 to come. So some of these features are available even today. There are two tips, freight as well as the MMFI account determination. I think I can, in the interest of time, I'm going to address the questions first, but just give a high-level overview that when it comes to capturing freight on purchased materials, there are multiple options on the standard side as well as on the actual side. So which one to use? Again, this is something that's same in both ECC and S4. No major new feature that I'm aware of. But again, a lot of clients have had a little bit questions on how to address this. So, and it's a popular topic, so I thought of including, but in the interest of time, I'm going to, pause on them. And of course, I'm running through the slides. So as it gets recorded, it is available for view at a later time on demand. Should be able to see that. This one is around the MMFI account determination. Again, a very popular topic, which speaks about, our OBYC. I'm sure a lot of you have used it. The one trick that I have seen not many people use is downloading the underlying table T030 as well as T156X for movement type. Either you merge them on Excel or through an SQ00 query, you can come up with a table which looks like this, which kind of tells you if movement type is 101 and you're talking about a purchase of a raw material, the system will hit debit BSX inventory and credit WRX GRIR. Whereas if it's a talk of a sale, then it's going to use GBB VAX to do the cost of goods sold piece, and then the inventory piece down below as the credit. So multiple such options are available. What I've found is if we give this kind of a list to the business user, they can keep this as a cheat sheet and be aware of what movements will address which account. And that's something that many people have found it useful. Okay. So we'll go to the questions briefly, but I'll quickly summarize what we have found or what we have discussed today. That most of our current SAP controlling setup can be optimized, can be used for our journey to S4. we of course have to know what is available in S4, and we looked at that. Some of the features that S4 has to offer, like universal allocations, will be easy to understand if you know your current allocation methods. Then you can decide whether it's good for me to move to the new method or can I continue to use this. Same with margin analysis. Am I happy with my costing based COPA or should I move to account based COPA? Those are the questions that may come up. Apart from that, our productive improvement techniques on standard costing, cost objects, and movement types is what we looked at. Yeah, these are all the resources. So a few of the books that I've had the honor to write are included here. Another book very popular on the material ledger by Paul Ovigele. The book that I didn't highlight here is on the production variance analysis, recently published by John Jordan and Janet Salmon. A very good book. Again, migrating from costing based to account based by Ajay Maheshwari. This is an e-bite, very useful. So a lots to learn and lots to know about the S4 features, but at the same time, knowing more about your current setup is also very important. And of course, we have one of the other authors on this call as well, Una. Thank you, Una. Una's book on Delta from SAP ERP into S4 is also very useful and very popular. I learned a lot from that book as well. Okay, these are just a few pictures of some of the books that I had the honor of writing. So this is the Delta for CO, similar to the book that Una has on the FI, that's focusing on FI. This is focusing on CO. This is on the first steps or the beginner's book, and this is the advanced expert tips book. Now we are on to questions.
Thank you so much, Ashish. So we've got quite a few questions here. The first question is kind of long, so I'll do my best to articulate it. Ashish, I don't know if you want to pull up the Q&A box just so you can see it.
Yeah, I can bring it up here. Yeah, sure.
So the question is, I'm curious if anyone else has experienced capacity issues with two key S4 tables. While we are using standard S4 costing functionality, both one ACDOCA and two MLDOCCCS, if I'm saying that correctly, are predicted to quickly reach their capacity at our company due to line item volume. SAP has recommended deactivating the COGS cost component split to mitigate number one and reducing cost components, currency types, and or number of cost component structures to mitigate number two. Seems very unfortunate we need to forego key functionality due to S4 table capacity limitations. Curious if we are alone in this dilemma.
Yeah, no, good question. You're right. It's very unfortunate that if these are important tables that we use a lot of data from, and you have to deactivate. I think what may be causing, we have to look at your scenario in detail. But this cost component deactivation, right? The COGS cost component. So I assume you're probably having multiple cost components. Let's say more than 15 or 20. And again, to give some background, SAP's restriction was 40 till ECC. From S4, I think it is 2009, that's been increased to 120 cost component. Now, not sure if many clients will need 120, but 40 probably yes. Now, what this COGS split does, as we know, is it splits each COGS line instead of one line in FI. For each of the cost components, it posts to a different GL account. So obviously, it's going to increase the number of line items in AC DOCA table. That's what is being highlighted here. I have personally not seen this at any client, but if you have seen this and this is the recommendation SAP has to give, I think what the suggestion could be to summarize it by multiple cost components. So instead of saying that I have raw material and I have some examples from food industry, so I'll take that. So sugar, flour, cocoa as three cost components. You want to summarize them as, let's say, raw materials. And same way, if you have any separate packaging related ones, paper, corrugated bottles, and so on, you want to summarize that as packaging. That is one approach that you can look at. But yes, it's unfortunate that it gets complicated with multiple cost components. The other one being this ML-Docs ECS. Usually the primary cost component split and auxiliary. That's the other one, right? And what I'm reading here is that to reduce cost components, currency types, and number of cost components to mitigate number two. So yeah, it's a little tricky one. I don't know if anyone else has that any other thoughts on this, but I would think that it's something that you want to review with SAP because they are the ultimate experts. I have personally not seen that limitation come through at clients. Maybe many of the clients are relatively new, but if you have a larger footprint, then yes, it becomes a bit of a concern. Okay, the universal allocation. So yeah, I'll try to briefly explain, but I highly encourage you to look at the presentation or webcast by Paul Ovigele. He explains it pretty well. What Universal Journal does is that instead of calling individual transactions for create, change, execute, everything is merged in one. Second, instead of using a type of allocation, let's say KSU5 or KSV5 or KEU5, it asks you what is the allocation context. Is it for overhead? Is it for distribution? Is it for margin analysis? And that's how it works. It's a very powerful feature, but yes, does get a little bit time to get used to it with the Fiori feature and everything. Okay. So Twila has a question on freight on purchase material. So Jessica, is it okay if I read through? I hope the team is able to see the questions here on the screen.
So I just changed it. So if you're attending, you can now view the questions. You can also comment on it. But Ashish, if you want to read it out loud as well, that's fine.
Okay, perfect. Freight on purchase material using conditions. However, we do not receive or record the freight invoice at PO line items. They remain open. Is there a way to close PO line item freight accrual if we do not have an invoice to post? Yes, beautiful. And I think Una had a very detailed blog post on this, if I remember correctly. MR11. MR11, as we know, is used primarily for GRIR clearing, small quantities, small amounts. But if your scenario is such that you never receive an invoice for GRIR, for purchase orders, for freight, then you are absolutely right. It will remain open. So you may have the tendency to, run MR11 and clear it up so that now the purchase order can be archived. But then there will be implications on what will you do with the accounting posting. System will think that because you didn't receive the invoice, you are going to always, gain out of it. So you may have to do another reclass. So that's one feature. But yes, please look at MR11 GRIR clearing, as well as a blog post written by Una on ERPfixers website. That will give you a lot of info. Okay. Kurt has a question. Can you confirm that margin analysis is automatically activated during S4? I was under the impression activating account-based COPA was optional, similar to actual costing. So you are right. It is not. So you'll be at a decision point at the time of migration. SAP's recommendation is account-based is default. You can activate costing-based over and above account-based, or you can deactivate account-based if you don't want to use COPA at all. Now, it's a question on whether you want to continue with costing-based or you want to also activate account-based and keep it running in parallel. The advantage of doing that, and one of my clients did that, and I therefore want to highlight this scenario to you, that keeping account-based as well as costing-based active gives you an advantage of seeing how both of them look together. Apart from that, the AC DOCA table gets the structure columns of the costing of the account-based COPA. So the characteristics information will already be available. So if at all you decide to use it in future, you have less work to do. That's the beauty of doing it ahead of time. That's the feature that I want you to be aware of and explore. So Jessica, any other questions?
We have a few more that were put in the chat box, but I will go ahead and send these over and we'll post these on our website.
Yes, please. Yeah, sure.
So just to reiterate, for those of you who came in a little bit late, and Ashish did mention this as well, we are going to post the recorded webcasts as well as the questions and the answers to those questions on our website a week from today. And we will be sending an email to all of the registrants, regardless if you attended or not, a recording of this webcast and access to that Q&A. So if you know anybody who wanted to attend but could not today, you can go ahead and forward them that link or direct them to our website. Once again, Ashish, I want to say thank you so much for a wonderful presentation. We're always happy to have you present with us and have you on board. And I felt like this was another successful Ask a Fixer webcast.
Yeah, thank you, Jessica, for the opportunity. And thank you, everyone, for your interest and questions.
Thank you so much. And please feel free to reach out to either ERPfixers or Ashish if you have any additional questions. Have a great weekend, everyone.